Happy semiquincentennial. The market gave us a little bit more to celebrate this week. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, July 3rd. We know that buying or selling a home can be very stressful and confusing. That's why we do these weekly videos so that you can know how the market is impacting your options as a home seller or buyer. Whoops. Starting off, we like to look at how the market performed over the past week. There are now 84 homes on the market, down from the 94 we had last week, with average asking price roughly the same, down $38,000 from $1,861,000 down to $1,830,000. 7 homes went pending, 2 more than last week, with the average pending or asking price on those pending homes up significantly to $2,128,000, up from the $1,632,000 we had last week. And 13 homes closed, another double-digit closing week, with the average asking price dropping significantly. We were the 10 last week averaged at $1,822,000. The 13 this week averaged to $1,589,000. Okay, so now that we know how the market performed over the past week, we like to look at the broader indicators that help us understand where the market might be heading. But before we do that, if you do find this information helpful, you can hit the subscribe button down below so you don't miss out on future updates. And while you're down there, you can share this with a friend also. I think everyone deserves to be in the know about their local real estate market and how it affects them. Okay. Let's take a look at those broader indicators. Starting with the inventory. It came down by 10 homes this week compared to last week. This is a very welcome sight after the inventory level was starting to get into record high numbers. The interesting part of the equation is that only 7 homes went pending, meaning that the drop in inventory wasn't all about the turnover rates, but also had a lot to do with some sellers probably deciding to take their home off the market after it had been sitting there for too long. With a double-digit reduction in the inventory level, it is no surprise to see that the turnover rate has improved. It didn't increase significantly, just a little bit. In fact, it kind of kicked back down a tiny bit at the end of the week anyway. But it did start moving in what I consider the right direction, especially for the way the market has been well below the 50% line. A couple more weeks like this and we can be close to a 100% turnover rate that signals a healthy, balanced market. The over-under number improved. Is still sitting in the under range, but well within a standard deviation. Anything less than a 10,000 price difference, actually 13,000 is wrong, it was down to 8,000 this week. Anything less than 10,000 plus or minus the asking price is really a neutral market, doesn't really favor sellers or buyers much at all. Now, one metric that did drop significantly this week is this sales price. The average closing price took a pretty significant drop this week. It went from just under 1.9 million down to just under 1.8 million, a difference of more than $100,000. Now, that doesn't mean that the values of each home are dropping that significantly, but it does show that our market is currently struggling to sell anything in the $2 million range, while the lower priced homes continue to sell. The Triple Q had a pretty substantial week. It had moved in the positive direction by 1% before dipping 1% to close out this week. The general uncertainty surrounding the tentative peace deal with Iran and the ensuing oil prices is continuing to make investors hesitant. The oil prices from the conflict are really holding the economy hostage. I didn't think. That's okay. Interest rates dipped back down this week, remaining going back and forth on this teeter-totter like we have been seeing over the past couple of months now. I think these rates will continue to bounce back and forth by a few basis points until the Iran situation is fully resolved, as the Fed tries to balance an economy that is being held hostage. If the Strait of Hormuz opens up permanently and oil prices come down, that will change the economic picture significantly. And I think we might actually see a difference in interest rates. As we head into the 250th anniversary weekend, it was encouraging to see a little bit of a positive movement in our housing market. Inventory came down, improving the turnover number a little bit, and the over-under number improved, even though it still remains below, the average closing price remains below the average asking price. The QQQ fund held value even though the economy is uncertain, and the interest rates came down a little. If the peace talks resolve in a long-term deal, I think we will creep back to a similar market that we had prior to the conflict starting. Yeah. Thank you for joining me on this weekly update. I hope it helps you understand how the market is impacting your options. Don't forget to hit the subscribe button down below and the notification bell so you can stay informed on how this market continues to shape up throughout this summer.